Hi, this is Zach Mir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 26th of November. Starting off with the FTSE 100, which has been able to find support at and above the 50-day line there at 95.33 in recent days. We also pushed through recent resistance at 95.90 above that, looking for 97 to 97.50, basically the support on the way down, such as we had it. But the key here is that there's no end of day close back below the 50-day line, and we head higher, ideally towards 99.50 in the top of the channel by the end of the year, i.e., by the end of December. Worst case scenario is that we've got to test one of the worst case scenarios is we've got to test the floor of the channel there at 94.60. Ultimately, the downside, at the most we're expecting, would be the October support at 92.76, but really expecting this market to stay within the channel as it has done since June and head back towards the top of the channel. The DAX is next, and here it's been a bit jittery and jumpy. This time today, it's now back above the 200-day moving average. That's at around 23,400. And the view at the moment is that above the 200-day line on an end-of-day close basis, we've got the ability to head back up to the recent November resistance, 24,400. On the downside, hoping that we won't see anything lower on a sustained basis than 23,000, the floor of that rising trend channel from April. Dow is next, and here we've got a picture which I suppose is a bit similar to the FTSE, so pushing back above the rising 50-day line there, just shy of 46,700 above that, looking at the top of the channel. 49,000 by the end of December. Worst case on the downside, 45,800 at the moment, and not really expecting anything worse than that on the basis that both the 50 and 200-day lines are rising and the RSI is pushed back above neutral 50 to stand at 53. Cryptos are next, and here it has been a bit of a struggle, continues to be a bit of a struggle. The price action rather dead. We had a peak towards 89,000, not enough really in terms of giving us confidence about this market. We're basically right on that line there, the red line there, which was sort of intermediate price channel floor from the December line. But we still have the risk that below the 90,000 zone could still head down for another leg at 76,000. And that could be seen as soon as the next week or so if we are going to get there. I suppose the only consolation is that the market's very oversold, and also that if there was a flip to 76,000, that would perhaps look rather attractive given that the recent peak last month was as high as 126. If you're a believer in crypto, that may be your place to go long and buy the dip. Moving on to Ethereum, and here it's still the old April support line, which is now becoming resistance. We've got that resistance for this market up towards the $3,000 level, but below that we still have the risk of either retesting 26.22 recent support, or even worse, down to the July support area around 23.90. Only above 3,000 do we have the chance of getting back up to 32.50 or so, which was resistance on the way down. You can see that RSI resistance line still ruling the roost as far as this market is concerned. On to a stock which, rather a market which has been defying gravity for quite a long time, and it is gold. Here you can see that finding support well above the rising 50-day line, normally a very bullish sign. That's now at 4,000, which is quite an achievement, looking for a minimum around recent resistance, 42.40, 42.50, and best case by the end of 2025 up to 4,600, that November resistance line projection. This stage only back below the 50-day line on an end-of-day close basis would be dangerous to this market and suggests we need to get a head back below 3,900 and late October support. Double RSI 50 rebound, so it doesn't really get much better than that in terms of a signal, a leading indicator on potential upside. Onto the stocks, and Ajax continues to edge higher, which is impressive. Here you can see that we've got this the shares approaching our initial target there around 7.2 pence. Above that, we're looking for as high as 12 or 13 pence, perhaps by the end of January. Maybe the 7 pence zone is enough for the end of next month. This stage only back below the floor of the channel there around 4.8 pence, really suggesting this is not a rising and bullish situation. Ascent Resources has been out of the news for a while, so it came back today. And interesting to see that shares sliding up again, level with the rising 50-day line. So still in recovery mode here. Best case scenario would be the top of the channel there, as high as 0.72, which seems rather a long way away, but maybe that's for the end of January. At the moment, waiting for an end of day close above that 50-day line around 0.46 to give us a retest of 0.6 pence September and October resistance, but not expecting anything lower now than 0.4 for this stock. On to Blencowe, where it seems every day we're on a rising move at the moment. Here you can see that we've got that rising trend channel there, looking for 11 pence, ideally by the, by the end of this month. So in the next week or so, V-shaped rebound there, bouncing off the floor of the channel, bouncing above the rising 50-day line, and an RSI 50 rebound. So 11 pence in coming days looks to be on track for this stock, and we're looking for that at least while we're above the recent 7 pence zone support. Cyanconnode, not a great performer in the recent past, but at least previous to the last few days. But it looks as though we're finally on our way with this move towards the top of that broadening triangle there at 9 pence. Hopefully that'll be hit in a day or two. Next level up is the top of that gap there from April at 10 pence, which we're looking for hopefully in the first part of December. Upside value while we're above recent broken resistance around 7.5 pence. European metals is next, and here, good bounce off a rising 50-day line. We've got the rising 50 and 200-day lines there. Looking at the top of the range and the top of that channel are at 18 pence by the end of next month, while we're above the 50-day line. At 11 pence, a company which has got exposure to WeCap is Hot Rocks Investments. I think quite a lot of exposure. Obviously, none of that's reflected, or hardly any of that's reflected in the share price, because that's what the London market does. Rising trend channel here, top of the channel there at 3 pence. Probably looking for that by the end of January as a conservative target, time frame. Otherwise, maybe by the end of next month if the market cottons on to the shares the company has in WeCap and other decent companies as well. Jersey Oil is next, and here, which is an example of a slow uptrend there. Top of the channel there up to £2.20. Maybe that's an end of January target, while we're above the 50-day line at £1.43. Nice RSI 50 rebound there to get us going there on the upside. Kodal is next, and here you can see that we're breaking the downtrend, which has been in place basically for the last year. We've broken up above the 200-day line at 0.32, but maybe that resistance line there at 0.34, much more significant, above 0.34, looking for up to 0.42 by the end of next month, which is the top of a broadening triangle. In fact, you could even argue that we should be looking at 0.46, because that's where the triangle actually could be, or triangle top could be. But at least while we're above the 200-day line, feeling that this could be a recovery situation at Kodal. On to SolGold, which has started to accelerate its move to the upside. We gapped up earlier in the month. We had a previous target there, I think that's the third or fourth target, lost count, at 18 pence, above 18 pence, looking for 27.5 pence. And that is derived from the upper parallel of the latest target that we've seen. So let's see if SolGold can deliver the goods. Let's put the line exactly where it should be, around 27 pence. So above 18 to 19, looking for 27 there on SolGold. Stock which keeps on edging up as well at the moment is Upland, and here we're looking for 3.5 pence, which looks as though it'll be a done deal in the next few days. Question now is what's the next target for this stock, and probably the upper parallel of that rising trend channel that I've drawn previously. It's great to see, as I said, the shares delivering the goods, and the target there up to as high as 4.9 pence by the end of next month, while we're above recent support. We'll stay on the right side of 3 pence. Valereum is next, and here it has had good news to what I thought was blockbuster news yesterday, a good reaction rather. Here we're bouncing off the 200-day line there around 7.8 pence above that, looking for the upper parallel of that falling trend channel at 14 pence by the end of next month. The company heading towards the US apparently, and all cashed up as well. But RSI 50 rebound there too, so makes the situation look great along with the unfilled gap to the upside we saw yesterday. Finishing off with WeCap, which obviously has its exposure to the situation at WeShop. More jiggery pokery in terms of the share price, so very volatile. Obviously, one or two people still deciding that it's a good time to get out, even though perhaps the shares are not fully pricing in the value of the WeShop holding. But there we are. Presumably, once all the wimps are out, then we could head up to the 4 pence area again, the top of that rising trend channel from July. Ideally, whatever happens, we stay on the right side of 2.6 pence in the 50-day line on an end of day close basis. That's it from me today. More updates tomorrow.